Welcome to another session of Kurgateri Finance and Accountancy Tutorials. Today we are going to look at an example that was examined by KASNEB. This one is extraction of the statement of profit and loss account and also the statement of financial position. So previously we looked at the formats of the financial statements. We concentrated on the profit and loss account, which is the income statement, and the balance sheet, that is the statement of financial position. So, and we looked at an example of opening and closing the ledgers and taking the ledger balances to the trial balance. And then from the trial balance, we also extracted the income statement and the statement of financial position. So today we are going to look at a practical example here that was examined by KASNEB on 30th August 2021. So these are trial balance that was provided by KASNEB to students, and then they were expected to open the statement of profit and loss and also the statement of financial position. So if you're not subscribed to the channel, please consider subscribing. Also like, share and comment. Make sure also that you share with your friends so that they can also benefit from these free tutorials. So straight to what you're supposed to do today. This is an example. Question 3, examined by KASNEB on 30th August 2021. So the following is the trial balance of Ujenzi Traders as at 30th June 2021. Land and buildings 8,000, furniture and fittings 5,000, purchase and sales 12,000 and 24,680 respectively. Cash at bank of 410, cash in hand 150, through to internet and postage 240,000 Kenya shillings. Then we are told inventory as at 30th June 2021 was valued at 950,000 Kenya shillings. So that means the inventory that is outside the trial balance is known as the closing inventory. You'll not find the closing stock inside the trial balance. What you'll have as the stock in the trial balance is the opening stock and not the closing stock. That's why you find the closing stock is outside the trial balance, right? Reason being, this closing stock will form the cost of sales in our next financial year, or the cost will form part of the cost of sales of the Ujenzi Traders in the next financial year. So we are required to, number one, to open or rather prepare the statement of profit and loss for the year ended 30th June 2021, and B, statement of financial position as at 30th June 2021. So we'll start with the statement of profit or loss. So we'll start with the profit or loss, bearing in mind our format. So this is Ujenzi Traders. Ujenzi Traders. This is Ujenzi Traders statement of profit and loss. Statement of profit or loss for the year ended. For the year ended 30th June 2021. We put our three currency signs, shillings, shillings, and shillings. And we said this profit and loss account is simply the expression of selling price minus buying price is equivalent to profit. That is what we said. And then we said this per unit. The formula is per unit. When it's many, we say sales. The selling price times to sales, the buying price for purchases is equivalent to profit. And then we say you have some adjustments of sales, you have some adjustments of purchases so that you get a profit. So let's go here. So we are supposed to start with our sales. So the sales here, sales, we have our figure. We have purchases and sales combined. So meaning the purchase will take the debit of 12,000. Ideally, the stock takes the debit side, it's an asset. And then the sales will take the credit side. So we have the sales of 24,680. So remember, these currencies are in thousands, in thousands. So we have sales, have got one adjustment. So we have sales of 24,680. I don't know if you have an adjustment. We say the adjustment that sales have is 1. The returns on these sales, the returns inwards. So we're going to look to see whether we have the return inwards in the question. So we don't have the returns on sales. Since we don't have the returns on sales, we assume this is the sales figure of 24, take it to the other side, 24,680, but in millions. Then we have less. We are less in purchases, but a different name. Be less cost of sales. Cost of these sales. We say the cost of sales, these are the costs that are directly related to the costs to the sales we made. Like the opening stock. The opening stock was the closing stock last year, but we sold that stock in this year. So the cost that we incurred in purchasing those stock last year is going to be taken care of by the sales of this year. So we have the opening stock. Opening stock of, we have the opening stock. We have opening inventory as at 1st July 2020. We had 1,800. And then this opening stock, we purchased some. So we are going to add the figure of purchases. But what you are going to add to this opening stock is the net purchases. So we add the net purchases. But the purchases figure has got some adjustments. So we have the purchases itself. So we have purchases, purchase figure of 12,000. You put it in this currency column because it has its own adjustment that we're going to add to the opening stock of 1,800 on this other side. So we said the purchases will less other items like the returns of these purchases. Stock drawings will less from the purchase as you go on. So I want us to see if we have those items that you're supposed to less from purchases. But in this particular question, we don't have the adjustment for purchases. So we are going to take the purchase figure straight to the addition, adding it to the opening stock. And then we less closing stock. The closing stock is the closing inventory, and you find it outside the trial balance. We are told the inventory as at 30th June was valued at 950,000. So you less 950. Remember our currency sign, our currency is in thousands. So we are going to also show this, the closing stock in thousands. So the figure is getting here. When you say the opening stock plus purchases, you less the closing stock, you take the figure to the other side. So you have 1,800 the figure is 12,850, but we said less cost of sales. So this sales figure here, you less the cost of sales. So you're going to get is the gross profit or loss. But here, because the sales figure is higher the cost of sales, then it's obvious a profit. So it's 11,830. And then we add other incomes. So I'm expecting us to add other incomes. You add other incomes. So from the question, I want us to look to see whether we have other incomes. Yes, we have one. We have rent received. I can see rent received of 1480, and we don't have any other income, so we are going to take it direct to this side. 1480, so that we get total income. Total income in our case 13,310. Then from the total income we less our expenses stroke losses. Expenses stroke losses. So the expenses, when I was introducing you remember our word dealer, we said expenses have got debit balances. So you need not to struggle. Just go to the trial balance and check the items on the debit side that are expenses. So let's start with the debit side. We have internet and postage. Internet and postage. Internet and postage of 240. Put it on this side. Expenses normally take the center column. And then you have administrative expenses. Administrative expenses of 130. Then you have advertising expenses. Advertising expenses of 210. And then we have insurance expenses. Insurance expenses of 60,000. Then we have salaries and wages. Salaries and wages of 620. So, but look here. When I was giving you the format of this income statement, you said when the wages are standing alone, you add them to the cost of sales. But when they are combined with salaries, then you take them to the expenses and losses column. So that is what we said last time. Then you have discount allowed. Discount allowed of 70. Then you have bad debts written off. Bad debts written off of 180. I think that is all about the expenses that we have for Ujenzi Traders. You get a total of 1510. You take it to this other side, and then you less. You say so you're going to say 1330. The figure is 11,800. This is our net. This is our net profit. So that is the statement of profit and loss account for Ujenzi Traders as at 30th June 2021. So let's go to part B. B requires us to prepare the statement of financial position as at 30th June 2021. So you take the heading as it is, Ujenzi Traders. Statement of position as at 30th June 2021. As I told you earlier, the statement of financial position is an expression of the accounting equation. where assets is equivalent to capital plus liabilities. The assets are divided into the non-current assets and the current assets. Expand the capital, you say capital, you less the drawings, and then you add profit or you less the loss here. But in this case, you're going to add the profit. The liabilities are divided into non-current liabilities, also known as the long-term, and the current liabilities or the short-term liabilities. So you're going to take this formula here. So you're going to start with the assets, the non-current come to assets, the current assets as you go by. So you're going to start with the non-current assets. We say the non-current assets, you have its cost, accumulated depreciation, you get the net book value, because what you're going to recognize in the statement of financial position are the net book values. So these are costs in shillings, but in thousands. Accumulated depreciation in shillings, but in thousands. Then you have the net book values in shillings, in thousands. So we start with landed buildings and non-current land and building. Land and building of 8,000, right? But you don't have anything about depreciation, so you put a dash. 8,000 minus the depreciation of 0 is 8,000. We have furniture and fittings are current. Furniture and fittings of 5,000. I don't see any provision for depreciation here, so those are net book values. Then you have, that is what you have. So you're going to close these ones, you don't further need them, you don't further need this. So you're going to add 8,000 plus 5,000 and 13,000. This total non-current assets. This is the figure. And then we come to current assets. Current assets, we have cash in hand. I told you start with the most liquid, cash in hand. Then we have cash at bank. Cash in hand is 150. Cash at bank is 410. Then we move to accounts receivables. Accounts receivables are debtors. These are assets. So accounts receivables of 1210. So from the question you can see the accounts receivables and accounts payables are in one row. So meaning the one that is going to take the debit is 1210 of accounts receivable. The one that will take 770 on the credit side is the account payable. So this one is like you're being tested on which elements here have got debit balances and which ones have got credit balances. So, and I told you that debtors are assets and assets have got debit balances. So, and then the creditors have got credit balances. So the 770 will be for the accounts payable. So and then you move on to, I think we don't have any other asset. You add these three, 1770. So our total assets will be the total of 13,000 plus 1770. So plus 14,770. So these are our total assets. And we said our total assets is equivalent to capital plus liability. So let's look at the liabilities, because so these are our total assets of 1470 should be equivalent to the total of capital and the liabilities. So let's look at the current liabilities first. We have the accounts payables. Account payables, I can see from the question, and I don't think we have any other uh, short-term liabilities. So we are going to take to this other end of 770. Then you don't have the non-current liabilities. So you move to financed by. So Ujenzi Traders business is financed by the capital he contributed himself, the capital. So we had the capital of 3600. Since capital has got its own adjustment, let's put it to the second column. We have capital of 3600, and then we less drawings. So this is just an extension of what we are doing. So we less drawings of 170. You let's show it in the bracket. Then we add our profit here, net profit. We don't have any other thing of 11,800. 15 to that. But ladies and gentlemen, there's something I did not add in assets. One very important thing that normally people forget is the stock. So we have the inventory. Inventory is part of stock, but the inventory we are going to show is the closing inventory of 950,000. So you add 950 here. So our total assets will be 15,720. So, and then we have our account payables, that one, and the financed by. So I want us to add these 16,000. So ladies and gentlemen, I'm doing this intentionally to show you. We said the assets is equal to capital plus liabilities. Our total assets are 15,720, but our total of capital liabilities are 16,000. So that means the accounting equation has not been obeyed. So it means there is some omission we've done in our calculations, or in what we entered here, or we miscalculated some of the things here. So going back, what I omitted intentionally is the traveling expenses. We had the traveling expenses of 280. I did not include the traveling expenses of 280 as required by the question. And that's why we arrived at the wrong net profit, which affected even the statement of financial position, 1180. So it means we overstated the 1180, omitting the traveling expenses, overstated this profit, the net profit. And that means, and you know, this net profit is the one that is going to adjust the capital or the finance by part. So if this one is affected, that means also the statement of financial position is affected. So I wanted to show you the relationship between the statement of income statement and the statement of financial position. If the profit is affected due to any error in the statement, in preparation of this statement of profit and loss, that problem is going to be escalated to the statement of financial position, and it will affect the balancing of the accounting equation. So let us include the traveling expenses. So we show the traveling expenses. Traveling expenses of 280. So when you add all the expenses, it will be 1790. When you say the total income received minus the total expenses, you'll get 11,520. This is the correct net profit. So that is the one that we are going to take to this other side of financed by 11,520. So our total finance by is 14,950. When you add to 770, I think you must get the 15,720. 15,720. So ladies and gentlemen, we have satisfied now the accounting equation where assets is equal to capital plus the liabilities. So ladies and gentlemen, that is how to prepare the statement of profit and loss and the statement of financial position. If you are not subscribed to the channel, please do so. If something that you need clarification further in what we've done here today, I would wish that you put it across in the comment section, or you can contact me via the contact details appearing in the start and the end of this tutorial. So until next time, it's goodbye for now. Thank you. Bye.